The NGX started the week at a fresh high, then quickly gave back about 3.5 trillion naira in market value over three trading sessions. At the same time, the Naira strengthened. The CBN released a major liquidity circular. Treasury yields stay elevated, and we've seen a cooler US inflation numbers that is beginning to change global rates conversion. So the big question is, are Nigerian markets entering another correction? Or is this just a healthy reset after the powerful rally that we've seen? So today we'll break down what happened in the equities market, the fixed income market, to talk about the CBN's new rules and what it means for the money market and why the fixed income market is still very attractive and what you should be doing right now and what investors should watch out for in the months ahead. All right, welcome everyone to The Edge, and I'm delighted to be joined by Oladipo Ajayi. Oladipo Ajayi is Head Fixed Income and Vice President at Chapel Hill Durham. Dipo, always a delight having you on The Edge.
Yeah, good day, Dr. Okafor. It's always a pleasure to be on your program.
Awesome. How's the week been so far for you? I learned you've been traveling across different continents.
Well, it's been a great time, and we're back. We're back home, back to work fully, and we kick.
All right. So I'm sure you have time to follow the market and see what's been transpiring in the market in the last week. So what are the major happenings stood out most for you in the outgoing week?
Well, the outgoing week, there are a couple of lot of things for me, and maybe because of where I'm seated. The week started from the announcement of default of bond by Geregu. And that was a big one for me because of where I sit. And I know clearly that one way or the other will affect the corporate credits in the market. Of course, it simply means that a lot of people will now have that knee-jerk around that patronizing most of the corporate credits when they come to the market. So it was a big concern. And also knowing fully well that Geregu declared dividend of about Naira that was paid in June. So it was, you begin to think that while would you pay your shareholders, you pay shareholders in June, knowing fully well that you have an obligation due in early August. And so I would have thought that the management would find a way around that, whether to actually get to actually draw down their line. And what is even more concerning is the fact that just last month, the first tranche of the embed bond that was raised by the federal government, about 333 billion was distributed among the Gencos, and which Geregu was one of them. And so it becomes a very difficult thing for me to understand that you just benefited from huge cash flow. And also, there's also an expectation because the federal government is back in the market as well, raising over 700 billion. And the purpose is to pay down on some of these obligations, which simply means that there's a near-term cash flow, expected cash flow for Geregu. You understand me? So I would have expected the management would have maybe one way or the other approach a bank, get the line, draw down on the line, and actually make good the obligation immediately. The federal government disbursed the second tranche of the fund. So it was summoned for me, and that's how my week started. But along the line, there are other interesting things that happened the week. Everybody is back in the open market, and so you know that kind of feelings when it takes you back the memory lane before 2019 when the window is open to everyone. You know, the Gen Z people that are just following market now, they may not understand that it's not always like this before.
Are you sure you're getting the generation right? You You maybe
Maybe
talking
Gen
about
Alpha.
Gen Alpha.
Maybe Gen
Oh,
Alpha. I don't know. Sometimes you find it to actually distinguish. But they are two great generations because I
yeah.
guess they are smarter, they are faster, and they also are able to harness the utilization of technology to better be more productive. Uh, so
Okay.
um, so when you look at a lot of things that happened in the week, it was mixed. And at the same time, when you look at where market closed, also, it further shows that it was more like a mixed week.
All right. So let's look at the market proper. So the week this week the NGX hits a fresh high on Monday and then sharply gave up all that, lost about 3.5 trillion in just three trading sessions. We've talked about the Naira strengthening, I think, to about 1,350 thereabouts to a dollar. And then the CBN dropped that circular that you just talked about on, I think, 12th of August. We also noticed the US inflation number. So, from where you see it, what's, you know, the between those numbers that we've seen from the US inflation and the CBN circular, which one do you think is more significant for the market? The US inflation numbers cooling or the circular, reinstating or bringing everyone back to the OMO market?
I think it was very difficult for you to actually isolate all this information because they are intertwined. But you can say, okay, maybe we rank them. I think when it comes to ranking, I will actually rank the US inflation figure. And
Mhm.
one of the reasons why that is very, very essential because that to a great extent will actually buy us time from the US Fed. So it simply means that we may not be seeing the
Any rate
US
hike?
Fed taking a hockey stance in the near term. And so it also means that before the end of the year, if this trajectory continue, we may likely see rates also moderate in the United States. And so what that means to us at home is that it means that there will be less pressure on the currency. Because when U.S. Fed decide to actually hike rates, what would that would mean is that yield will go nuts, and
Mhm.
when yield actually hinge upward, that will actually lead to a bit of capital reversal across the globe. A lot of the investors want to go back home because they're better return they can actually get down home. And that will put pressure on Naira and to that great extent. And so that's why I said that will rank as number one. So beyond that is just the news around the Homo issuance. So it simply means that the confidence is what actually gladdens me. For you to say that now the window is open simply means that it is not what it used to be. The purpose is now more than what we used to, what is meant for. Normally, OMO is to actually moderate and correct liquidity in the system.
Yeah.
But at a point in time, we turned it to FX FX flow driver. So it simply means that for us to now actually attract FX inflow into our market, we created the window. We're using that window to lure foreign investors into the market. But for the first central bank to actually take that bold step, to say the window is wide open. What it means now is that now FX is now becoming more like secondary. So it simply means that correcting liquidity in the system now stand up primary. Because over time, you see the yield in the almost space will moderate. And so you see that convergence between where almost rates are trading and also the rate for the NTB. And when rate moderates, it may not be good enough to actually continue to attract all foreign investors.
Yep.
And what that would mean is that you may just now see some of them actually backing out of Nigerian market and shopping for how far across the other frontier and emerging markets. But what it means to us is that the central bank feels that they are now more capable to actually defend the currency. And when you look at the information released recently, the central bank mentioned that we are currently having about 40 billion net reserve So it
Yes.
means that free of any encumbrances.
Mm-hmm.
Of course, the reserve is about 52 billion, not of 52 billion. So
Yeah.
it means that the encumbrances, FPIs, and all those things account for about 12 billion. And it means that you will have 40 billions. And when you are as a country, and when you have a net reserve of 40 billion, I think you're on on a great ground. And so these are some of the things that gladdens me. So it means that some of the policies that we are taking, they are working. It also means that the pain that Nigerians has gone through, they are not in vain. It means that we are now building the economy or the country on a better footing. And it means that anyone that comes after Matt can actually build on it and take Nigeria to a better place.
Yeah, that's really interesting. Seeing that circular because CBN actually kind of, uh, went back to what we had pre those tightening period. So we now have almost everyone back in the Omo market, and then the U.S. Inflation numbers also kind of cooling. So and then Nigeria inflation figure also cooled, even if it was slightly in the month of June. So it is looking as if inflation numbers are now becoming more episodic than it continue to be like a recurring, version that we've seen in the last couple of months. But Deep was still sticking with the market. I talked to you about how the market lost about 3.5 trillion naira. So was this pure profit taken after the strong yield today that we have? That is still cycle about 56%. Are we seeing a shift in sentiment?
Well, I would not say that we are currently seeing a shift in sentiment. I think it's purely profit taking. And don't forget that we mentioned just last week that we may likely see a bit of this happen more. And it was premised on the fact that there are a lot of obligations that are due to many responsible parents at such a time like this. And so most of them may need to wind down on some of their position so that they will be able to actually meet some of the obligations that is due. It's a
Yeah.
school fees period, and so it's a period where people have huge cash outflow, and that such outflow could necessitate what we are seeing in the market. So it's not something great to cause a panic. We saw some of the market dragger in the week. MTN lost about over 4% in the week. We saw Boa lost about 10% in the week. We also saw Zenith too. Zenith also lost during the week.
Yes.
But while some names were
And
losing,
ARA there was on offer, I think
yeah,
maybe it was on Friday or Thursday as well.
exactly. So, but while some are losing, some are gaining. We see names like Excel Africa was on a winning streak last week, but the strength is not enough to actually cushion the effect of the loss. And also beyond that, GTCO also gained last week. Access Bank also gained last week. But when you look at the weight of these three, it's not enough to actually cushion the effect of the big losers. And that's one of the reasons why we saw market actually drop from about 57.81 gain that we have had here year today to about 55.91 at the end of the week. So it is more like profit taking, and like I mentioned, it's something that will happen for a shorter time. So it's something that you tend to people. So it's not
Okay.
broad market based. It's just people cherry picking, looking at instruments. Where was I? Where am I holding this instrument? And then what is the current price? And you take profits on some of those next.
Yeah, Deep, well, one other thing that is coming to mind is so we are getting, as we get ever closer to the Dangote refinery IPO, is this a case of people making funds available for that IPO? People just rotating, as you said, or people making funds available for obligations coming due in September? Banking stocks and consumer goods were among the hardest hit during the week. And then we had this banking recapitalization that just finished. So I expect that investors will have a lot of confidence in the banking space, but we've seen a lot of weights being shared in that market. So where there's a smart money moving in August and maybe even September, as I talk to you, we're hoping that Dangote refinery, the IPO comes live in September. So is this a case of people readying funds for that IPO?
Well, it's not impossible because we saw that happen during the private placement as well. We noticed a bit of sell down by our portfolio manager, institution, pension guys. What they did was to actually shed some of their current holdings in some names so as to actually rotate into the private placements. And so it could also be that as well because like you said, we're expecting the IPO to actually come up anytime soon. And it's something that is actually backed by the market. And beyond being backed by the market, it's backed by the whole country. So the
The weight of
president
entire
is
countries on it.
something. Yeah, because you can see currently where how um, how the business has been able to actually help the country in times of need. At a point in time, I was thinking, where do you think a price or the price of per liter of PMS would have been? Assuming we don't have Dangote refinery.
Yeah.
And what comes to mind is that we could have been buying north of 3,000 because I know what could happen here because there'll be huge scarcity. And when there's scarcity, you understand what will happen in such a time like that. And so everybody has seen that the business that pay cash flow on a daily basis.
Yeah.
And so smart investors are looking at it that where else do I need to put my money if not in businesses that actually print cash on a daily basis? And that's why you see a lot of people want to be party to what is currently happening in that segment of the market. And we've seen this happen in the past. I remember when MTN also did same thing like that. We understand the level of participation that we saw on the part of retail investors, knowing fully well what MTN would bring to the table. And I remember a lot of people bought MTN around, I think, about 160 thereabouts. So when you look at where it's trading now, so he also brings to mind that some of these things they are good for your portfolio, and I think same thing with Dangote. So I won't be surprised if people are already preparing for that, and they are currently taking advantage of the elevated prices in the market to cash in and provide liquidity for the forthcoming IPO.
So turnover collapsed 66% from the previous week, and we've seen that players stayed selective this week. So is this still a liquidity problem as we're seeing a handful of investors participating in the market, or are domestic institutions simply sitting on cash and waiting for the next catalyst? I also remember that First Bank was about to raise $1 billion in capital last week. Do you have any updates about that?
Well, like we earlier said, what we are seeing currently in the market is simply profit taking. And, in times like that, it's not a time where you rush into the market. Every investor is looking to buy at the best price. So when you're thinking that market will continue to actually take a bit of profit, it's not a time where you want to rush into the market and jump into the market. And I think that's one of the reasons why we are seeing a lot of people standing on the fence. And don't also forget that we mentioned that this week everyone has been restated into the OMO market. So some portfolio manager could also look at it from the angle that I could get a better return from the OMO market. So I may need to actually move from my current holding in equity into that segment of the market as well. So it's actually not just one issue that led to the quietness we actually saw in the market. It's beyond just an issue. A lot of things altogether happened. That's why I said that people are preparing for IPO. People have obligations they need to meet, and also there are quite a number of savvy investors that are looking at opportunity to come into the market at a better pricing. So they would rather stay on the first pending when the coast is clear. And I think that's exactly what we are seeing in the market.
Yeah, I was asking about the First Bank's capital raise. Do you have any updates about that?
Yeah, well, yeah, currently still in the market. We're waiting for the outcome. I think by the end of next week, we'll get the full
Better,
feedback. But looking
yeah.
at where the pricing, I think will be heavily oversubscribed because it's trading at a great discount to where the secondary market is trading.
Okay, do we have any understanding of where that they plan to issue the shares?
They're planning to issue at 110 naira.
110. I think the market is about 137 the last time I checked. So
Yeah,
that's a
yeah,
huge discount, as you said.
yeah. So
Okay.
a lot of people would rather just go and buy from the IPO rather than coming to buy in the secondary market.
Okay. Yeah. So that's a seasonal offering that the First Bank is trying to issue there, raising fresh funds. So, Deepo, let's talk about the fixed income market. Now, I know we already broached that that topic earlier. So, on 12th of August, the CBN released a circular that removed the discount window restrictions linked to participation in the NFM and primary government security actions. Then
Mm-hmm.
they also reopened tenured repos in 4 to 90 days, and the OMO market is now accessible to individuals, corporates, and even non-bank financial institutions. In plain English, Deepo, what does this actually change for banks' day-to-day liquidity management and for the broader money market?
So what this means to the bank is that one, there's every tendency in the bank will lose a lot of deposits because it simply means that rather than do a placement with you, I can as well participate in the OMO auction.
Mhm.
So on that front, it means that I will likely see a bit of drop in placement with banks. And on the part of the government, and I mean central bank, it means that the central bank have more will likely have more applications compared to what they used to. And so it simply means that the subscription will now be more than what we used to see in the past. So then when it used to be only banks and foreign investors, now we have banks, we have foreign investors, we have foreign portfolio manager, and we have a couple of others. We have individuals also that can actually participate in that window. And what that will mean to the market is that there's a better opportunity now for an average investor. But for the bank, I think in one way or the other affect them negatively, but nothing enough to actually cause panic because it means that their interest income will drop as well because we expect this to actually push down rates. And so this simply means that before the end of this quarter, we will likely see automobiles trading around 18% because when we look at where market actually opened last week, the first OMO was issued north of 20%, but we believe that the trajectory will be downward, and that will be premised on the level of demand that actually visits the central bank window on a weekly basis. And so I feel that for banks, it may not be totally a good news for them. But for me, I think for an average investor, it's a very good opportunity for you to get a better return.
Okay, this was happening just a day before the NTB auction. So the yield on the 364-day bill climbed to about 17.59 from 17.35 the previous auction. And
Mm.
so investors bid a massive about 4.2 trillion, with CBN offering just about 500 billion naira. So the the question is, was it CBN deliberately raising rates instead of allowing that heavy demands to the heavy demand to push down yields, or investors demanding high yields in the auction?
So when you look at what happened at the NTB auction, the total subscription for the long-dated instrument was about 4.168 trillion.
Mm-hmm.
And the total allocation was about 1.26 trillion. And don't forget that the offer was just 500.
Yes.
So what happened at that segment of the market was because the DMO decided to take more than what was offered. And when you look at what was offered on the 1 year paper, it was just 500. So it means that they took close to about 250% of what they actually offered from the market. And that's what actually pushed yield northward. And I also believe that DMO also understand what would be the impacts of the decision of the central bank to open the OMO auction windows to everyone. So it simply means that they may need to start borrowing at higher price. And so they decide to actually front load that decision by going all out at this auction to take as much as what they can actually take from the market. And if you remember vividly that the central bank did not make announcements around the OMO auction until when the result for the NCB was already in the market. Okay. So I also think that the central bank decided to allow that to happen. So imagine that the central bank announced OMO on a Wednesday morning. I think the volume we saw at the NTB auction would have been half of what we saw because of better opportunity that investors will want to cash in on the OMO side of the market.
Yeah, that's correct. The information actually filtered in on the day of the auction. That's correct. But Deepo, looking ahead now, I think we have the NGM board auction coming, and about 1.1 trillion is on offer. That's continuing the Q3 calendar. Do you expect yields to stay sticky at these elevated levels because yields climbed to, I think, about 17.7 or 17.8% during the week? Or could new liquidity rules start to pull yields down?
Well, when you look at what happened last week, it was not unexpected because of the decision to open the OMO window to everyone. Yeah. We know that will actually drag up the yield in the exhibit space, and in the same vein, that will also affect what happening in the on the bond side of the market. And that's why yield actually went up marginally to around 1770 levels by the end of the week. So going to the auction. Auction is a time where this is determined by the DMO. Beyond the volume, it's also the pricing at which the DMO is ready to borrow. And when you look at the structure of the calendar, I think that rates will clear around 17.5 to 17.75 across the three maturity on the calendar. And my view is premised on the fact that the DMO is not ready to actually borrow at any outrageous price. And at the same time, everyone understands that the current upside movement will be short-lived. Immediately, the convergence between the OMO and the NCB pricing is actually achieved. And so like we said, in the short run, you expect that convergence, and that will actually take the NCB yield up and also drop the OMO yield. And at that point, we expect rates to now moderate downward. And don't forget that we have spoken around inflation in the US. We mentioned inflation in Nigeria last month. The expectation is that we will likely see further drop in inflation figure for the month of July. And what that will mean to the market is that it will mean that there's every tendency that the monetary policy guy may further loosen their policies to ensure to actually encourage growth. And if that now if that's part of what's currently on the table, it means that yield will further drop. So anyone that wants to go to the market will actually want to stay around between that 17.5 to around 17.75, 17.8 levels.
Okay, before we switch to another topic, Dick, but throw Naira stability into all of this. What's the direction of the Naira given this new rule by the CBN?
So, like I said, I mentioned something that will put a bit of pressure on Naira, and I said that currently it's a bold step that the monetary policy guys are taking. So it simply means that they believe that they have enough reserve to actually cushion the effect of the drop in FPI inflows into the country. And it also means that they feel that they have the capacity to meet the local demand as we speak currently. And that's one of the reasons why the central bank will actually toe that line. And don't forget that it's not that the window is closed to FPIs. What it means that the window is still very much open to everybody, just that you may not see that level of return that you have seen in the past. But something that just came to mind is that at a point in time, I think it was late last year, Omo rate was trading around 18%, 18, 19%. And the FPIs are still coming to the market. At 18 half, you're still getting north of 20% as effective yield. And when you compare that to cost of borrowing in most of these advanced nations, you are still having close to about 1,500 spread. And so it means that the carry trade opportunity is there very much there. But what would just happen is that the level of spread that you enjoyed in the past may not be as high as what will happen in the future.
So you're saying what CBN has done is simply to democratize the money market, allowing as many as possible to participate. But talk to us deeper on how our viewers can access the OMO market. What do they need to do if they want to purchase or want to be a part of the OMO auctions? What do they need to do?
What they just need to do is that they need to be very close to their banks because OMO auctions, they are not structured auction.
Okay.
So it means that you don't get a 2-day, you don't get a 1 week, a 2-day notice. You most time get an hour or sometimes a 30 minutes notice to the auction. So sometimes you can actually drop your instruction with your banks ahead of time that you would like to participate in the home auction whenever the central bank actually announce any. And what it means is that your banks will actually pay you down for such opportunity immediately. Immediately there's any announcement, you may actually likely get a call from your bank telling you the tenor that are currently on the calendar, and you can then make your decision whether you're going on a longer dated or you are staying with a shorter dated. But one thing is that you don't have the opportunity to mention the pricing. You understand at which
That's determined by
you don't determine your price. The price is determined by the bank. So it means that when you are submitting a bid, let's say for example Bank A, when Bank A is submitting all the bids for the bank and all its customers, it will submit it as just one bid to CBN. So it means that bid has to carry just one rate. So it also means that everyone has to go at the bank's rate. So even if you decide in your mind you had wanted to actually submit your bid at 20.5, but your bank is going to the auction at 20%, it means that you have to stay by the rate at which your bank is presenting the bid at the auction. And but when you look at it, it's still far better than actually investing in the NTB space because you still have close to about 300 basis point spread above where the NTBs are trading.
Okay, yeah, thank you for bringing more light to that, Deepo. Let's look at the broader economy now. So our reserves are sitting at pretty high levels of about $52.5 billion. Oil production is also recovering. And I think tax collections are also up. We're seeing growth around 3.8, about 3.9, but we'll still have this sticky inflation, I think about 15.9. Do you have any projections for where inflation is going to print in July, and how sustainable is the current stabilization, especially in FX and the downward direction that we're seeing for inflation?
Well, for inflation, I think it's just going to be marginally different from where the figure printed in the month of June.
Mm-hmm.
And the view is premised on the level of volatility that we saw in the month of July. At a point in time, don't forget that the Strait of Hormuz was open, and at point in time, it was further short. So it simply means that we saw that level of volatility in the month of July. So we expect that to still impact the figure. So the level of gain that would have enjoyed that has been moderated by the change in decisions that we more like a policy somersault or decision somersault that we saw in the month of July. So we don't think that it will be anything so great from different from where it printed in the month of June. But when we look at FX, we have seen the trajectory of FX. We have seen a stronger Naira. Naira traded around the 1,350 levels, 360 level last week.
Mm-hmm.
And that is premised on the level of influx of foreign portfolio investors into the market, and coupled with local supply in the market. And I think for the foreign portfolio investors as well, a lot of them understand that rates will start dropping. So everyone is rushing to start catching on this the current high yield levels. And that's one of the reasons why we saw that huge inflow last week. But when you look at where we expect rate to be going forward, like I mentioned, there could be a bit of pressure on Naira, but it's not something tangible enough to actually cause any panic in the markets. For us, we feel that rates will continue to trade between the range of 1,350 to 1,380 till the end of the year. On the side of inflows, this marks about the third time that we actually met our quota, oil production quota with OPEC.
Okay.
So for us, it's more like a good news, because if you follow market where we were actually meeting only 50% of our quota, of course, when you're not meeting 100%, it sounds like something that calls for celebration. And I think if we can continue in this stride, what it will mean is that it will mean more dollar inflows into our reserve, and also it will mean more capacity to actually provide or defend the currency when the time comes. So I think that with the level of aggression that we are seeing in the reserve, coupled with the expectation that we'll continue to produce more, and also don't forget that there's been a lot of policies out there to help develop and open up the oil and gas sector. And if we continue in that light, the expectation is that before the year 2030, we'll start producing close to about 3,000 barrels per day. And if we can follow that through, what it means is that it means stronger Naira, it means stronger capacity to generate effects, and it also mean that will also mean stable inflation.
Okay. Are there specific data or policy events between now and say mid-September that could move both the equities and fixed income market? I'm sure you're not expecting the CBN to lower rates from 26.5, or do you?
Well, for me, I would say the first one that comes to mind is inflation figure. That we're expecting to inflation figure before the period you actually mentioned.
Mm-hmm.
And also, we are still expecting the GDP for Q2.
Okay.
And that's also a catalyst that could also help to actually create market activity. And lastly, like you mentioned, there's going to be an MPC meeting again in the month of September.
Yeah.
But from where we are seated, and also considering that we are not expecting any aggressive drop in inflation in the month of July, I think it's still going to be another tea party. I also think it's going to be a time of wait and see, and there could be a couple of other forward guidance that will that we may likely
Come
hear
from the meeting.
from the meeting.
Mm-hmm.
But I don't think it will be anything close to actually rate cut. For us, the best time I think the earliest I'm actually looking at will be November rather. And please don't mind I'm being very conservative because it was just on the ground that coming to drop rate in the month of September will be premature. And that could actually put a bit of pressure on the economy. So I'm not expecting any rate cut until November. And at the same time, the key driver that I feel will move markets will be informations around inflation and GDP figure. But beyond that, there could be other policies, circular released by central bank that will also help create that level of activity, just like the one we saw this week. And don't also forget that by the end of this month, we expect to get the final judgment around whether we are going to be on the FTSE index
Also index,
or
yeah.
not,
Mm-hmm.
or neither. If that turn out great, and for me, I think that that could also be positive for the market. And from just last week, SEC released a circular mentioning that all trades must be settled by 5 p.m. The next day, latest by 5 p.m. the next day. To my mind, that sounds more like giving room for most of these foreign investors, and this could be more like the ground or
More
the center ground.
concessions, right?
Yeah, like the
Part of the
center ground where
concessions that they
both
may be
parties.
given.
Yeah, exactly. Yeah, maybe like the center ground where both parties are currently meeting
Okay.
on the issue at hand. From where we sit around, trade settles around 12 o'clock, and also the concern that their inability to be actually move in phone before the settlement time. So elongating it to around 5 p.m. To a great extent sounds more like giving room to them as well, for them to also be able to participate in the market. So when information like this comes to the market, and maybe in the fullness of time, that will also help create a bit of activity in the market.
All right. So we look forward to what the CBN would do in the month of September, especially around interest rates direction. Well, let's switch gears a bit and look at the global market. We already talked about the US inflation number coming in at about 3.4 year on year, and with eased to 3.4 from about 3.5. Core inflation around 2.5%, also cooled off from about 4.7% year on year. So markets have dialed back that expectation that the Fed was going to be raising interest rates. So market is now looking at the possibility of a hold. So the odds are no longer, expecting that there's going to be a rate hike in September. But Fed's Chair Walsh, still has this 3.5 to 3.75% target range on, on the interest rate. So what's your base case for the 15th to 16th September FOMC meeting? I know that's still a couple of weeks ahead, but what's your expectation? Just reading based off these CPI numbers.
I think it's just going to be another waiting time. And like we said earlier, it will be too premature for the US Fed to want to cut rates. And don't forget that the expectation is that inflation continues to bite. We may likely see at least one rate hike in this year. But based on the trajectory of the movement of inflation, what we're currently seeing is that there's every tendency that the evil days may not be any day close. So it simply means that we are not expecting any rate hike if market or inflation figure continue in this trajectory. So at the October meeting, the expectation is that the US Fed will maintain rates. Of course, like we said, we'll get full guidance around what will be the next line of actions, how they are going to position what they will do in the months to come. But I don't think it's going to be anything around the fact that there could be any rate hike in this year.
Okay, if the Fed decides to say hold or maybe even cut later versus a scenario where it decides to hike, maybe one more this year, what does that even mean for the global risk assets, the
Well,
dollar, and overall market sentiment?
well, if the Fed decides to actually hike this year, we all know what that means. What that means that it means stronger dollar. And what it simply means that people will begin to dump assets in other currency, move to assets that are dollar denominated. And what that would do is that it will strengthen dollars, and that will be more like the what will happen. And for economies like the frontier emerging market, they may be more like the big loser. Because they will likely lose a lot of investments that's currently sitting in the economy, and the investment in questions are more like the foreign portfolio investors. And don't forget that we know them as the hot money guys. They only go where there's better opportunity. So we will likely see more like capital reversal in that regard. But if US Fed decide to cut rates, what that will mean is that opposite will be the case. So it means that the assets in the United States market yield will drop. When yield drop, it makes investing in the credit market become less attractive. So investors will begin to shop for better return across the globe. So it means that they want to take a bit of risk. They want to go to emerging market. They want to visit the frontier economies to actually take advantage of the elevated yield that's currently sitting in those climates. So what that will mean is that it will mean a weaker dollar, a stronger complicity in currency.
Okay, I think we also look forward to see what's going to happen on that side. Deepo, as we begin to round up, one of our viewers wanted to find out what your take on is investing in mutual funds and ETFs. I know we already had an episode on that, and I think I asked them to check. But generally, as we begin to bring the discussion to a whole, what's your take on investing in mutual funds and ETFs?
Well, for investing in mutual funds, mostly if you don't have the leeway or the time for you to follow markets and do analysis and some of those, it's better for you to just invest directly in mutual funds, in ETFs. And we have said it here before that it's more like you saying that I want a fruit and I want a basket of fruits.
Mm-hmm.
And you can invest by yourself and you invest in Dangote. But when you buy ETFs and actually, for example, okay, let's look at the banking sector. You may have stocks like maybe in GT, but if you have invest in ETF that tracks a banking sector, it simply means that you may be having investments across maybe 10 banks. Rather than just having investments in just one bank. And same thing also is with mutual funds. It gives you that diversification that you cannot get by actually doing things by yourself. It also help you moderate risk. And also, don't forget that the portfolio managers managing some of these mutual funds and ETF, they are smart guys. They are professionals, so they have that better opportunity that you don't have. And also, so it simply means that you are pulling funds together. You may not be able to buy Dangote private placement by yourself, but as a mutual fund, because funds are pulled together, they may be able to buy into that pool, and buying into that pool means now you're also a partaker of such investment. So if you know that you don't have the opportunity to track market and you don't have that huge capital to invest on your own, it's better for you to just invest in ETFs and also mutual funds.
All right. Thank you so much, Deepo. I think that's all that we have to offer today. Again, thank you for always finding time to come and share your vast understanding of the capital market. Always a delight listening to you, Deepo.
Thank you very much, Dr. Kafo. It's always a pleasure coming on your program.
All right. Thank you, everyone, again for joining us. If you do have any questions, either for me or for Dipo Ajay, please put them in the comment section and like this video on your way out. And if you're new to the channel, please subscribe to the channel, hit the notification bell, and so that you can always be notified when new episodes are uploaded. And don't forget to share this video with your community. So we'll be back again next week. Take care, everyone. Bye.